we've done prior. So hope everybody had a great New Year's. We'll start the call off this year with Steve Ramsey from United Home Life. He's going to have Cindy Nees on the phone. Steve is the Director of Independent Agent Marketing, and Cindy is the Senior National Marketing Advisor. They're going to kind of get together and give us a better overview of what United Home Life can do for us. What I do is I normally track business from year to year to year to year. Last year, United Home Life took a big jump, a big spike in business, and the year before it's done even better. So what I'm looking at now is that I asked Steve to get on the phone to kind of go over some things with us to see the value of why you should consider writing United Home Life. When I look at average numbers, I've gone over this with you guys before, how the actual average premium for an application is getting up there. What I've seen in the last 6 months is that the agents that have been writing United Home Life, they told me, Joe, it's nice. It's only got a 2-year look back. It's an easy process. They got the e-app. And also what's happened is that their actual monthly premiums are going up to where the agent can actually sit and make more money with the product. So what I'm going to do, instead of taking away any more time from Steve and Cindy, they're very, very busy, I'm going to put them on the call so where they can explain to you and answer any questions you guys may have. So if you have any questions, write them down, and we'll do a Q&A at the end. So, Jay, if you can open up Steve and Cindy. Yeah, they are. Steve, you there?
I'm here.
Hello.
Hey, good morning, sir. Good morning. Good morning, Cindy. And again, I appreciate you guys taking time out of your day. I know Monday's a busy day for everybody. And from there, I'm just going to let you guys take over and do what you do best and explain why these agents reconsider and consider using you guys to do more final expense business.
Okay. Thanks again, Joe. Thanks for everyone that's on the line. We appreciate the opportunity to do this. As Joe said, I'm Steve Ramsey, accompanied by my associate, Cindy Nees. And I'm going to walk through this rather quickly. Kind of give you a little background of UHL. Some of it may be redundant for some of you, but nevertheless, I'll give you a little background. We're obviously, United Home Life was a standalone company back in 1990, up until 1980. But they started in 1948. In 1997, Indiana Farm Bureau purchased United Home Life, and for the real sole purpose, Indiana Farm Bureau is a captive. It's a Farm Bureau company. It's Indiana's its only state. They are a multi-line agency system. They do primarily property casualty, but a fair amount of life. They purchased UHL in 1997. The purpose of getting outside of Indiana and growing independent agent distribution. That's my experience. I've been doing this for 33 years. Cindy's been doing this for how long, Cindy?
33.
Probably 33 years as well. So and all of it's been an independent agent distribution. So we have a lot of experience in this as well. And so I came here in 2004 to help get UHL to grow this life revenue in the independent distribution model. And as I indicated, UHL's been around since 1948. They've been actually in the simplified issue business, our current marketplace, since 1990. So that's nearly 3 decades in the simplified issue business. So obviously we've got a lot of experience doing this. We're a highly rated, financially strong company. UHL is A- by AM Best. UFFL, which is our parent company, part of the Indiana Farm Bureau parent company, life company, is A-rated by AM Best.
And I would like to say that UFFL's rating from AM Best, the A rating, has been in place for 75 consecutive years. That's amazing. That's a very short list with AM Best, and our parent company is on it.
Yeah, that's good point. Thank you, Cindy. From a financial perspective, anybody that understands the farm bureaus of the world, Farm Bureau is a very solid name, solid company, and we are definitely in our parent company, as Cindy mentioned, UFFL, has been solid for many years. And like I say, well over $2 billion of assets, well over $20 billion of in-force between the companies, United Home Life and United Farm Family Life. And we've spent years, this past several years, since I've been here, I know, refining and getting better in this marketplace. I didn't have time to talk about our historical path, the journey that we've been on. Our mainstay product is the final expense product. It used to be, truth be told, it used to be term. We entered this market in the early 2000s to sell simplified term. And of course, 2008, those of you around in 2008 understand the market changed. The market collapsed. And since that time, we've kind of ventured over into the final expense whole life product line. And we keep it simple. Our motto is simplicity. We are as simple as we get. We're trying to get even simpler with a lot of technology and features put in place. Along that line, we have a whole life portfolio, final expense whole life. We have a simplified term portfolio, and we have a small accidental death product. That is the gist of our product line. Whole life, we go anywhere from guaranteed issue to, or maybe the other way around is probably the better way. We go everything from a standard preferred client all the way down to a guaranteed issue, an uninsurable. So we've got a product to fit any, on the whole life side, we've got a product to fit any client's needs, any client health situation. Whole life premier, we have a 4-in-1. I'll talk primarily about the final expense product. We do have a preferred standard whole life product for your very healthy clients and also for juveniles. But right now I'm going to focus on the final expense series. The final expense series is a one app, 4 products on one app, anything from what's called a table 4, very minor health issues, all the way to a guaranteed issue product, which essentially is no health, that it's an uninsurable. There's no health questions on it. So the Premier is a 2-year look back on heart, stroke, circulatory conditions. It's obviously what we call our Table 4 products for your more healthy clients. If they don't qualify for that, we've got a Whole Life Deluxe. And it's perfect for, once again, both these are immediate death benefit products. It's perfect for previously declined clients, disabled clients, clients who are insulin-dependent diabetics can qualify for this. If you can't qualify for a Deluxe or Premier, you could potentially qualify for our graded benefit product, which is called Express Issue Whole Life, which has a 2-year grade, a 1-year look back on heart, stroke, cancer, as long as there's no major treatment. And of course, if they can't answer, if they have had those issues, have had something in the past year, can't answer the questions to qualify for EIWL, they could qualify for the GIWL, the Guaranteed Issue Whole Life, which is exactly as it says, a no questions asked. It's very similar to what you see on TV, the Physicians Mutuals and the Colonial Penns. It's a true guaranteed issue product. And it has a 3-year grade, a death benefit, which we are looking to change. We're in the process of filing some products for the new 2017 CSO. So some of our products by the 2020 are going to change a little bit. Guaranteed issues be one of those. We're getting rid of the 3-year grade, going to go to a 2-year grade, and increase the face as well. You can right now you can have 10,000 of guaranteed issue whole life. You're going to get 20. It's going to be 25,000 as a maximum. Let me move to the term. I'll do the term real quick. We've got a term product series, what we call Simple Term 20, Simple Term 30. There are, once again, they're what we call Table 4 term product, great for controlled, someone who's got controlled hypertension, high cholesterol, type 2 diabetes can qualify for, as long as they're not taking insulin, can qualify for the term. You go from anywhere from 25,000 to 100,000 of face, issue ages 20 to 60. But great product. And once again, I can't reiterate enough simplicity. Similarly, we've got a 20-year term return of premium, what we call simple term 20 ROP, which very few carriers have. I think even more companies will get out of this marketplace by the end of the year, just because of the regulatory difficulties surrounding it. We will not. We have a great 20-year term, return to premium term, 50,000 minimum, 200,000 maximum, ages 20 to 60, non-tobacco 20 to 40, I think tobacco. In addition, we have a unique product on the 20-year. I mentioned we got straight 20-year term. We've got a 20-year term with return to premium. We also have a 20-year term DLX product, which is a Table 8 product geared for those clients that have additional health situations. Can't qualify for the regular 20-year term or the 20-year term ROP, but they're taking insulin dependent or insulin for diabetes. They've been previously declined. They can qualify for this one. Certain mental disorders such as schizophrenia, bipolar disorder can qualify for our 20-year term DLX. A little bit higher premium, but once again, it's available. And in terms of it on a term chassis, other carriers do not have a Table 8 term that can accommodate certain health issues. They would kick it out, and you'd have to go and apply for a final expense or you'd have to be table rated on a different product. And the last product I mentioned earlier, we have an accidental death product, which I won't get into a lot of details on it, but it's one of the most overlooked products that we sell in terms of simplicity. It is a dynamite product. It's truth be told, it's really a whole life product, but we don't consider it a whole life. I mean, we don't, from a marketing perspective, I don't talk about it as a whole life. It's a little whole life product, say a $250 face amount, whole life face amount with a huge accidental death rider. And so when I mentioned the $250 face amount whole life, it's a $100,000 accidental death rider. That's why we call it. It's really an accidental death product. We keep it simple. Ages 18 to 60. You can buy it in one of three options: a 50,000 face, 75,000 face, or 100,000 face. The premium is the same regardless of age, regardless of gender, regardless of tobacco status, and it has two very unique features. It provides a return of premium, so client returns the 20 annual premiums within the 20th year, and it increases. It'll actually double. The face amount will double over the 20-year period. So it's gradually increasing. I don't think we looked at a number like 4 to 5% a year. So you're seeing the accidental death benefit increase. You're seeing the return of premium exist. The premium is going to be level for those 20 years. It's a great product, and there's no health questions. There's just one what I call an avocation question. Have you had DUI in the past? I can't remember the exact question, Cindy, but you haven't had your license suspended 5 years and a DUI. So it's more of an avocation question, and you're not participating you're not a hang gliding or hazard sports or something of that ever. So from that perspective, and I'm just going to sum it up, and maybe Cindy may have some other things to add here too, but strengths, UHL strengths, what you can look for us for, obviously experience, I've talked about that, high ratings, we're a national company, we're in 48 states plus DC, simple product line, we have day one coverage for declines, for disabled and insulin-dependent diabetics, competitive premiums, a very competitive application, and probably it took me this long to get into this, we are on eApp. We are on the iGo eApp platform. All of our products are on that except for the provider, which I didn't get into the standard preferred product. But the final expense, the term, the accidental death are all on our eApp platform. We have return of premium products, term and accidental death. Insulin-dependent diabetics can obtain immediate coverage. Another key strength of ours. We go pretty low in the face amount spectrum. We have mobile quoting. I don't know if anybody's looked at but we're not on the App Store, but there is a way, we formatted our such a way that you can actually run our quick quotes on your mobile phone. All you gotta do is set it up on the home screen. No sign-ins required. It's actually pretty slick. I use it often here, and anybody that gets this will use it all the time, and it's pretty slick. We have great incentive trips. We can talk about those. We're getting ready to go to Malta, which is an island, several islands off the coast of Italy in the Mediterranean. Next year's trip we just introduced, and qualifications began January 1 for a Alaskan cruise. Cindy might be able to tell you more about all of those. If you have questions on that, feel free to ask. And we have a lot of marketing material that I can tell you that once again, I'm thanking Cindy for putting a lot of this stuff together. There's a lot of stuff, self-support, aids, flip charts, anything that you can imagine is available. All of it's on our website, but unfortunately, and I understand that why people don't sometimes know what's there. It's our job to try to figure out how to get it out there so you know what we have. And commissions, I think I don't talk into specific commissions, but our products, when I mentioned our final expense product, are all of the commissions are level across those products, with the exception of guaranteed issue. You're going to take a little bit of a hit on the guaranteed issue product, but if it's the immediate death benefit, Premier, immediate death benefit deluxe, or our graded death benefit EIWL, the commission's the same, which some of our competitors do reduce it if you go to a graded benefit product. Cindy, anything to add?
I would like to talk a little bit about a couple of things that I think are pretty special that we do, and it gives agents the opportunity to go back and visit with their clients and provide some additional value. Steve was mentioning our term portfolio. We have a child rider that's available on our term products, and for face amounts of $100,000 or more, you can add a child rider, a $5,000 child rider at no cost. All you have to do is fill out the application. So if they have an existing term plan with us, but they don't have child rider and they've had a child since the policy was sold, go back to them and they can get $5,000 of coverage at no cost, and it covers all the children. Each child that they have would be covered for $5,000. So that's an easy way to add some additional value, and also, as you all probably know, the more hooks, so to speak, that you get in a client's pocketbook, the more persistent your business is, and that's always a good thing. We also have child rider on our whole life plans, and again, you can go back to them, and if they've had a child since they purchased one of the plans, you can add the child rider for $5,000, $10,000, $15,000, or $20,000 just with the application. We don't offer the free coverage on our whole life portfolio, but we do have it on term for policies over $100,000. The other thing I wanted to mention is our provider product. It's standard and preferred, and it is a great policy for juveniles because it goes down to age 0. And what makes it really nice is that it has a built-in guaranteed insurability rider at no cost. So if you sell provider to a juvenile, the younger, the better, because, you know, if something happens, God forbid, in the child's health history, something adverse, they're no longer insurable. If you've sold them a provider already, that protects their future insurability, plus the GI rider on that policy gives them the option to convert with no evidence down the road, and that's a really good thing. I mean, if a child develops juvenile diabetes, that can be a real problem in finding coverage. Putting provider on them when they're young, really young, is a good thing, and that goes down to age 0 with face amounts up to $150,000. So think about provider as well. And then the last thing I wanted to mention on Protector AD, there are limits to the occupations that we'll cover with that plan. But if you go to the local police or local firefighters, people who sometimes have trouble getting coverage, we will take them for Protector AD. We'll also take long-haul truckers. And I don't know if you're in Sawyer country, but we'll take people that work at sawmills as well. So, you want to look a little deeper at some of our products, and we're always here to answer any questions that you might have. Or if you've got a situation you want to discuss it with somebody, we can help with that.
Yep, very, very good. And just real quick before I'll turn it back over to Joe, and on the website there's a Smart Zone, some Smart Zone pieces that Cindy has put together that are just dynamite. That talk about, if you look at there's a Smart Zone for final expense, compares us to the competition, lists a lot of the strengths and highlights some of the features of the product. There's a Smart Zone for 20-year term with ROP, and a Smart Zone for provider whole life. Once again, compares us to some of our peer competitors. Great little feature that you need to take a look at. With that said, I think we're ready for questions if anybody's got any.
Thank you very much. Guys, anybody have any questions they want to ask? I've already gotten a couple text messages in, Steve, for you and Cindy, but if anybody's got any questions, do a *2. We'll open you up. Steve, I got my first question here is that the agent says that if you have a client that's got high blood pressure, cholesterol, and they're an oral diabetic, they can get your term product with no problem.
They can get our Term 20 DLX product.
Oh, okay,
yeah,
so they can get the
what
DLX.
I call our Table 8 product, which is a unique product. I don't know of anyone that has a Table 8 term product. So our Table DLX, our Term 20 DLX.
Up to 50,000.
Say it again, please.
Up to 50,000 in face.
Okay. 50,000. That's if they're on insulin. Did you say earlier that if you have a client that has an oral diabetic, they can get your regular term, or did I mishear?
Yeah, I don't. That's on a Table 8 basis. No, I don't think they can. I don't think they can qualify. Yeah.
Okay.
I think the product would reference it.
Well,
it's non-insulin.
Like if they're taking metformin or something, that's an oral form of insulin, though, right?
I'm asking you about the metformin, yes.
So I guess that would be that would potentially be available on our standard term, not our Table 8 term.
Right. So a standard term, because the agent asked, and I thought I heard this here, but we're going 90 miles an hour. You have a client that is just a plain old diabetic who takes just metformin. They can get your regular term product.
We're actually going to pull up an application to confirm all that. So can we go to the next question and we'll come back? Is that okay?
Yep. I've got another question here from a gentleman named by Joe. He says, are you ever going to not require a telephone interview?
Well, we don't require one on guaranteed issue or Protector AD.
Yeah, on certain products we do not. But no, right now all of our products require a PHI. And the only thing we're going to do, I would say at some point we are in the process of looking at getting rid of where it's a streamlined, the streamlined process. I'm trying to find another thing, trying to do things at once. But yeah, we're looking to potentially streamline that process where the phone interview is done as part of the EAP process. And it's all embedded into the EAP process. I can't give you a lot of details on that because I'm not going to tell you where we are on that. But yes. But right now, I think the easy answer is 100% PHI, phone interviews required on everything except accidental death and guaranteed issue product.
Okay, I've got a gentleman named by Galen has a question. Galen, you're on the air. Good morning.
Yes, good morning. My question is concerning your GI product you say you have. Could you, somewhat compare and contrast your GI product with some of the other products as to, why that would be a better fit than other products?
I had trouble hearing the question, Galen.
He asked, how would you compare your product with other products, and kind of like why should he offer your product compared to other programs?
Are you talking about any of our products?
GI. No, just the GI
Guaranteed.
product. Right.
The GI product?
Yes, ma'am.
Issue ages 45 to 75. Base amounts down to 5,000 up to 10,000. No questions asked. Pretty good deal.
Yeah, it's very, I would agree it's a little bit different with a 3-year grade. There's a lot of competition out there that has a 2-year grade. That's one of the reasons why we're changing that. But right now it's more of a combination product. A lot of companies don't have that. So if you can't qualify for something else, you got to resort back to the guaranteed issue product. We do pay a high comp compared to the competition on it, and right now I can't sit there and say ours is better than everybody else on the guaranteed issue product line.
Well, what I like about your guaranteed issue is that you've got the provider, which will go down to age 0 for children, guaranteed insurability when the child gets older if they're sick. You've got 3 different levels of a whole life product with level commission. So whatever your commission is, level for the Premier, the Deluxe, and the Express issue. And then, as you said, you get a little bit of a hit on the guaranteed issue. You got the accidental standalone product that you said is good for policemen, farm workers. And so to me, your overall portfolio, if an agent was just to have United Home Life, they got everything from 0 to age 80, no matter how your health is. That's how I look at your products.
Yeah, I agree with Joe. I think his particular question was guaranteed issue whole life, I thought. And it is still, like I say, it's a great product. It gives you I think 12 and 18%. If you die death in the first 3 years, it's 6, 12, and 18%.
On the premium.
Yeah, back to that. Cindy, you want to? You had the question on the diabetes question with the term. The Table 8 term has a knockout question on it that says.
Table 4.
Well, this is the Table 8 section here. So if you're requiring insulin diabetes requiring insulin treatment, if you have to answer no to that or answer yes to that, you're going to kick back and to the standard term. So if you're not taking insulin for your diabetes, but you're treating it with metformin or whatever, you could qualify for our term product, which is our standard 20-year or 30-year term product.
Okay, good. And another question just came in there on that same term product that you just mentioned now. They asked, what is the minimum and maximum face on it for a non-med?
Are you talking about the insulin-dependent diabetic one?
No, ma'am. Just the regular, your regular term.
25,000 is the minimum on our term product. It's 50,000 on the ROP, and then the maximum is based on issue age. For example, on the SI Term 20, which is the Table 4 plan, if they're 20 to 45, we'll go up to 200,000. 46 to 55 is 150, and 56 to 60 is 100. Got a $100 policy fee, which is commissionable.
Okay. And the 56 to 80, they can get an actual 20-year term and also the 20-year return of premium?
No, 56 to 60. not 80.
Oh, 56, I'm sorry, okay, 5660, okay,
Yeah.
okay.
And on the return of premium, the issue ages work the same. And yes, the return of premium is built in. So they can either, get a refund of their annual premiums paid, or they can use those annual premiums to buy a reduced paid-up plan with coverage to 95 and no more premiums due. So they still have some amount of coverage in place, even if it's not the original full face amount.
I like that. Okay.
Yeah, in fact, we've got a sales piece to that end that talks about that, the RPU, that you, at any point in time, you don't have to wait till the end of the 20th year. There's cash in that return of premium term product. So you could, at the 12th year, decide to take the cash and buy a reduced face amount. So it was $100,000. Now you're going to take the cash and buy a $40,000 paid up policy with no further premiums due, age 95.
And I would like to point out on all of our products, we tend to be known for final expense, but let's not forget that we can take our issue ages down to 20 on most products and 0 for provider. Most carriers in the final expense market start at 45 or 50, but we will go down below that on our whole life plans. It's issue age 20 to 80. 25 to 80 on the Express Issue Whole Life, the 2-year grade, and 45 to 75 on the GIWL. But you aren't limited to seeing seniors. And while we talk about these as final expense plans, you don't have to market it as a final expense plan. It's whole life coverage. So if somebody who's 30 has some issues with, blood pressure or something, there's no reason you can't go out and sell them a premier plan. You could sell them as much as $100,000 for somebody ages 20 to 60. That's still good coverage. That's still no medical exam. That's still no fluids testing. It's just a PHI and an MIB search and a prescription database search. That's it. So you're not limited to issue ages 50 to 80. Think about the fact that we have expanded issue ages, which a lot of carriers don't.
That's definitely a plus with you guys. I agree. Jay, any more questions? Okay. Anybody want to ask another question? If you do me a *2. Don't be shy. Got another question there for you guys. How long does your average PHI phone call last when they're with the client?
10 to 15 minutes.
Okay. And also,
let me qualify that. I have to be honest. If they hear something, though, in some of the responses that the client's giving, it could take a little bit longer as they, try and make sure they have all the information they need to give a result. You know what I mean? But it's typically 10 to 15 minutes.
Okay, same agent asked this question I'm going to ask you now. If he's got a client that lived here in Florida that has now moved to Georgia, and he's got a non-res in Georgia, can he do an e-app for the client on the phone and then do a 3-way phone call with the client not in front of him?
Yes.
Yep.
Okay.
Yeah, all of our products can be taken remotely. You don't need to. Now, it does create a little bit of the agent takes a little bit of risk when they're trying to do phone sales or remote sales. But in your case, they would know that client because they moved. But anybody doing remote sales, I've always said before, in fact, I'll interject it here, the phone interview is there to protect the agent as well as the company's concerns. If agents I've talked to look at the phone interview and as not a problem as to why am I getting another phone interview, why is this being done, it actually can protect the agent, especially if they do it at point of sale. Most of our phone interviews are at point of sale. It's going to make sure you hear exactly what the client, we hear exactly what they told you.
So they can either do an e-app or they can do a paper app, submit it, do the 3-way phone call, and get an approval without being in front of the client.
Yes, but for the paper app, they've got to mail it to the client to get signatures and have the client send it back. So e-app makes the most.
E-app makes the process easier.
Yeah, because with e-app, we just do an email signature. They get an email, they review the app, they click a button, The agent gets notified the app is done and they can send it in.
Okay. Does anybody else have any questions? If not, I'm going to let these good people get back to work. Star 2 if you got another question. If not, they're going to go back to work. Okay, I got another text that just came in, Steve.
Okay.
Regarding the accidental rider, the standalone accidental program you have, that
Yes.
you guys said earlier is good for policemen, and I know farm workers is another one. Is it also good for like firemen or by a Uber? Is that okay?
Yes, it is, but they need to be volunteer community firemen. We don't want somebody like Red Adair who fights these massive fires in oil fields, that kind of thing. You know what I mean?
Okay.
It should be local firemen.
Volunteer firemen, you said?
Yep, volunteer,
Okay.
Local community, that kind of thing. Obviously we don't want to take people that do, when you talk about law enforcement and firemen, we don't want the Red Adairs of the world. We don't want SWAT team. We don't want Secret Service, those kind of things. But we do want to try and help, those local law enforcement and firemen in our local communities. So that's who we look to provide coverage to.
So an actual policeman walking the beat can be offered this program here?
You bet.
Yep.
On an individual basis, it's not a group plan.
Yeah, in other words, don't go and market it as to the police union in the city of Philadelphia, for example. They're gonna say that's too much of a risk. But yeah, the occasional policemen, we offer that. Firefighters, truck drivers, you mentioned. I mean, we've got a great brochure on the website that outlines the acceptable actually, probably more importantly, the unacceptable occupations, which are, it's a fairly short list. You can't be a race car driver, you can't be active military, you can't be on SWAT team or a pilot, aviation pilot, that kind of stuff.
Okay. One final question. This is from Cousin Joe again. He wants to know that he's very busy, he's always hustling, he's buying a bunch of leads. If he writes your program and the client does not have time to do the phone interview, can he submit the application and then you call the client at a later time? Is that possible?
You bet. On the front of the application is a new business cover memo, and there's exactly space to let us know that we need to call, what's the best number, what time, et cetera. So all the agent has to do is say that, he didn't complete the interview while he was talking to the client, and here's their phone number and the best time to call, and we'll set it up.
Okay, I've got no more questions via text. I got nobody's hands raised. So, Steve, what I'm going to let you do and Cindy do is kind of close the call up, and I want to tell you thank you very much. I'm going to let you guys end the call. Thank you.
Okay. Well, we appreciate the opportunity. I don't know if you have our contact information, but Cindy, you can, if you want to give a phone number and email. If you've got questions after the call, feel free to send it to us. We want it. So.
Well, my email address is Cindy, CINDY, .Neese, that's spelled N as in Nancy, 2 E's, 1 S as in Sam, @UnitedHomeLife.com. And our toll-free number is 800-428-3001, and my extension is 7896.
Steve, if you can just email me Cindy's information, and then what I'll do is that I'll just blast it out. Because a lot of these agents are driving, sitting in their cars. So, Cindy, I didn't mean to interrupt you, but it probably is easier if I just add to what you're doing, just send it out to everybody so they'll make sure they have it right there in their phone.
Perfect. Nope, sounds good. We appreciate the time. We will get an email out to Joe, and he can distribute it. Like I say, if you have any questions, let us know. We appreciate the business.
And your time.
Thank you
so much for that. Thanks for this opportunity.
Okay. Thank you.